Across to the technical and fundamental views this morning. Nilesh Jain from Centrum Broking with us. Sunny Agarwal of SBI Cap Securities joining in. Very good morning to both of you, gentlemen. Thank you so much for your time. Nilesh, I'm going to start with you on the index views.
Very good morning to you. Good morning, everyone. So as far as index is concerned, today we have a monthly FNX expiry for the Nifty and Bank Nifty. So we are expecting some bit of volatility. The range from today's trading perspective looks like 25,800 to 26,000. We may see a cautious start at the beginning, but overall, since Nifty is approaching its crucial support zone of 25,900, so that is the important level to watch out for. But I believe there could be possible that we may see selling pressure at the high level, so markets are likely to remain under pressure. At the same time, if at all we see the levels of 25,850, 25,800, that's a good area where one can take a fresh entry on the long side. From a pullback perspective, we may see a move towards 25,950 to 26,000. So as of now, looks like some bit of consolidation today. 25,800 to 26,000 will be the range for the Nifty. The Bank Nifty, on the other end, it has a very strong support at its 50-day moving average, that is placed at 58,700, and 59,300 will be the resistance. So that's the range for the Bank Nifty as well. So as mentioned, Bank Nifty is also likely to oscillate in this range from today's expiry point.
Okay. If in such a scenario, Nilesh, what would be your top trading calls for the morning?
So I have two buy ideas. First of all, Hoodco, where we have seen a good build-up on the long side on derivative front yesterday. On technical front, we have seen a continuation of up move for the 6-7 consecutive session. So we may see a follow-up move on the upside to continue. Good price and volume breakout was seen yesterday. So target would be 234, stop loss would be 222, and Hoodco is a buy. Another stock that is from OMC space, that is HPCL. In fact, HPBP, IOC, all these three stocks are looking positive. HPCL is a buy for up the target of 485, and one can keep a stop loss below 468, 485 to 490 kind of levels we can see in HPCL.
Okay, so those are a couple of ideas from Nilesh. Sunny Agarwal, it's while the year end, it's not necessarily a not news heavy day. Fair degree of news flow out there. Can I start off with what have you made of the IP uptick and the impact that it has on some of the capital good names, if at all, or the consumer capital names? Because I think a lot of activity happened because inventory clearance happened. So therefore, does the IP data prompt you to look at any sector or any stock afresh?
Yeah, good morning, Neeraj. Good morning, everyone. I think I would not like to read much into the IIP or 8 core industry data. That number has been pretty volatile since last 2-3 years. So just looking at a 1 month data won't be a right way to take a view on entire sector. But having said that, I mean, majority of the capital goods players are sitting on a very robust order book. The only issue with the entire cap goods sector is valuation, which is not in a very comfortable zone. But still, if somebody want to pick and choose a few names among the cap goods, pure play cap goods players, so I think a few players which we like is Cummins India, which is again a proxy play on both automobiles as well as the rising industrialization in India. Thermax to some extent a kind of a proxy play on power sector. And among the cap goods consumer side, I think I would like to go ahead with more of an EMS players which are catering to a cooling product. So companies like Amber or PG Electroplast, where we have seen a decent amount of correction, and with the summer season 3-4 months ahead of us, we believe that fiscal year 26 can be a good year in terms of summer, and that should aid the earning growth for all these EMS players.
Sunny, very good morning to you. What about a Dixon in that EMS play?
Again, yeah, Dixon, no doubt, seems to be one of the fastest growing players among the EMS play. But again, the valuation is something which is not comfortable. And post Keynes episode, we have seen that the entire sector has witnessed a kind of derating. So maybe buy on dip is the right strategy as far as Dixon is concerned. Just purely because of valuation, growth is something which is not a concern as far as the Dixon. But the valuation is still expensive, and maybe buy on dip is the right strategy one can adopt for Dixon.
CLSA has an interesting note out on Dixon today, where they've cut the target price. I mean, even that cut target price is higher than the current market price, but they've cut the target price sharply to 15,880 from 18,800. They've said an outperform though on medium-term recovery visibility. They're saying margin improvement via backward integration in smartphones in the medium term. They expect weak near-term outlook, flat year-on-year revenue expected in Q3 and a decline quarter-on-quarter for the third quarter is what CLSA expects. FY26 guidance cut risk emerging. I thought that was interesting. FY26 to 27 earnings per share cut by 16 to 17% due to lower volumes and margin delay. FY28 earnings per share largely unchanged, recovery expected over time. So that really is the question, is this the right time to buy? Stay on with us, Sunny, but let me go across now to Hiral this morning, who's joining us with all the chatter from the dealing room. Good morning, Hiral.
Good morning, Tamanna. You know, it's very interesting to see what's happening around because the chatter is pretty muted and the question over here is volumes are thin, what should investors do? But a couple of stocks which are in focus on the back of this. Now, first up, if you see Vedanta, what happened to it in trade yesterday, you did see some bit of selling pressure. And apparently, there are sell flows on large HNI desks. Now, what conversations are indicating is there is a buzz of a potential stake sale that could be on the cards when it comes to Vedanta. And that's the reason why the stock was nearly at the day's lowest levels towards the close of trade. So watch out for this one. The second one is Indigo. Indigo has been in the news and there are constant sell flows coming in on the institutional desk for Indigo as well. In fact, the delivery volumes are on the higher side on Indigo. So that's another stock you should be watching out for. The third one on our list on the Hurdon Street is HFCL. Now, if you see the stock, it actually was up as much as 10% in intraday trading day, and it ended with gains of nearly 5.5%. Now, dealers are indicating that this move is only because the stock is moving out of the F&O segment, and that's the reason why you've seen these kind of gains that have come in when it comes to HFCL. From the consumption side, you have a Tata Consumer as well, where buy flows are being indicated on large HNI desks as well. And the only reason why this kind of flows are coming in is because the indication is that the third quarter of FY26 is going to be a strong one for Tata Consumers. And if that happens, you'll see some bit of a rub-off effect that could be coming in for the FMCG sector as a whole as well from a consumption perspective. And you've seen what the IIP number has already indicated so far. Entero Health as well. Again, the dealers are indicating that a large FI is said to have exited completely when it comes to Entero. So watch out for this one in trade. And it was very interesting to see the way JSW and Tata Steel moved in trade in yesterday's session because the entire metal pack was up. JSW Steel, now what has happened is there are positional buy calls that have been given by multiple dealing rooms. So there is some momentum on that one. And simultaneously, there are positional buy calls coming in on a IndusInd Bank as well. So both of these counters that are in focus. Very lastly, Honasa Consumer is one you should be watching out for. In fact, this one is a khabar confirmed where a big block deal actually took place in yesterday's session. And the dealers had indicated that the promoters could be likely buyers. And that's the notification that has come in as well, that Varun Alag is the one who's actually increased additional stake when it comes to Honasa. So these are the ones that we should be watching out for.
Yeah, absolutely. It's great to see that there's so much deal flow even on the last 2 working days. No, actually not all our working days. Last 2 days of the calendar year, Hiral. So great to hear that. But I want to come to Sunny on the point on Honasa, and that was khabar confirmed on NDTV Profit that you have a promoter buying. We have Bajaj Finance also promoter buying. And this is something that the street usually looks on favorably. But how would you look at a Honasa?
Yeah, definitely. I think if you look at Honasa, last 2 quarters has been pretty robust in terms of earnings delivery. So in both the quarter average, the company has delivered kind of 40 crore quarterly PAT number. And it seems to be on track to deliver a profitable growth going forward. So again, we continue to maintain a positive view on Honasa. Again, backed by a promoter buying from an open market further build our conviction on this stock. So I think the view will remain positive as far as Honasa is concerned.
All right. Well, again, one of those IPOs or listings which post-listing hasn't done too much really. I mean, could have been volatile, sure, but in terms of wealth gains, hasn't been quite up there. So bear that in mind. Actually, Nilesh, can I ask you to come in on the defense names? Because we've done the fundamental checks out there. Some of them have been active, some of them haven't been. But is there a trade in anything as small as an Astra Microwave to something as large as solar to a BEL or anything else in between?
Out of all defense names that you have just mentioned, Astra Micro is something that is looking slightly on a positive side. Reason being, recently it has reclaimed its long-term 200-day moving average. Yesterday, it has took support at its 50-day moving average. So I would, suggest to buy and decline. If at all you get any dip towards 970, 965, that can be a good entry point. Keeping a stop loss below 945. Astra Micro is a buy for upside target of 1050 to 1080 from a position perspective. But other defense names like HAL, Mazgaon Dog, BEL, yesterday we have seen a sharp decline. So I would suggest to remain cautious on all those names. Better to wait for some more reversal confirmation out there.
You know, you were speaking about Honasa. I just want to pull up Honasa since the listing and what it has done. In fact, I'll take a view from Nilesh as well. It's still about 15% down since listing. And yes, the last 2 quarters and the results have seen some pop, but far away from its listing price. Nilesh, are you tracking this company on the charts?
Absolutely. So looking at the overall setup, yesterday we did see some bit of rebound, but counter is still trading well below its all long-term and short-term moving averages. Structure is not looking promising. It is important to break 300 level on the upside to call it as a short-term bottom, but the structure is not looking that promising. We may see some bit of consolidation to continue selling at the high level. That cannot be ruled out. So it's not advisable to buy at current market price. Rather wait for a breakout above 300, then we'll get a confirmation for a buy.
Okay, so that's the story on Honasa. We'll take a very short break, but we're coming right back with the pre-open rates and more. Stay tuned. On the other side, we put the spotlight on Indigo, Titan, and a lot of other stocks that should be on your radar.
Back with India market open, we are likely to have a flattish start, maybe with a bit of a downward bias. But just before the market start, it's important to highlight this story as well. On Indigo, it's revised its pilot pay structure with a hike in allowance is expected to boost take-home pay. The changes come amidst adjustments in flight duty time limitations. Domestic labour allowance for captains has been increased by 50% if I'm not wrong. Okay, there's a lot of information. Let me get in my colleague Danish, who tracks this very closely, to give us the details. Danish.
Oh, well, that's correct. In a major boost for Indigo pilots, the airline has decided to restructure the pay structure of the pilots. And by this, I mean only the additional allowance has been changed. And this covers several different verticals like the deadhead allowance or the transit allowance. And and in a very interesting way, Indigo has also introduced something called a tail swap allowance. And by that, I mean that whenever a pilot, he or she is supposed to take one aircraft from point A to point B, and just in case due to some or the other reason that aircraft has to be changed, then the pilots will also be paid for that. But there are certain terms and conditions for that it needs to be more than 90 minutes and all. But on the other hand, if we look at from a broader perspective, this has the timing of this is very interesting as well, because we are seeing that what happened in the past month and the tight regulatory scrutiny that Indigo is under right now by literally the DGCA, Ministry of Civil Aviation, as well as by the CCI. So this could also be a big morale booster for the pilots that are there in Indigo. And top-notch sources in the airline have also told NDTV Profit that that although this was planned earlier, but the timing as such that everyone feels that probably Indigo is doing this just to increase more confidence in their pilots, and this will be applicable from 1st January 2026. So if we look at from another broader perspective, while it might not translate into a major bump in salaries, but some way or the other, the pilots are all set to benefit from this. and definitely it is going to boost the morale of Indigo Pilot.
I want to see the Interglobe stock. Thank you for that, Danish Anand there with that report this morning. Well, if it's not going to bump up salaries majorly, then is it going to hit Indigo's expenses majorly? Then is the question. Not really, maybe. This is, of course, just the first minute of the pre-open session. So all of these rates will settle and they'll change. We were talking about Honasa before the break. Honasa consumer about 3% up. Lupin again has gotten some nods for a GLP-1 drug. Lupin showing some action this morning. So was Alok Industries amongst other things. So that is one to watch out for. Imami, EID Parry showing some weaknesses coming in. Actually, it's positive news for sugar stocks. So maybe that will settle in just a bit from now. But those are just the initial rates that you're seeing. I want to pull up the defense picture actually. Some of these defense stocks have already shown some action, but BEL, Mazgaon, Cochin, let's look at a few of those, and you're going to see some action there as well, but nothing massive that is coming in at this point as far as defense is concerned. Let me go across to Nilesh, and we've been talking about this in detail, but Nilesh, top defense picks on charts?
Well, out of all defense names, if at all you get any dip towards, as far as dip is concerned, towards 2450, Mazgaon dog can be added because the counter has already formed a base at 2350, but not at current level. It's better to wait for some decline towards 2450 to 2500. That can be a good entry point. Positionally, we are bullish on Mazgaon dog for 2800 to 2900. That's the position target. And similarly, HL is also a preferred bet, but that's buy on breakout. So wait for a move beyond 4500. Then HL can be bought for upside target of 4800. Keeping a stop loss below 4250, HL can be added on breakouts.
We'll keep an eye out for this. And Nilesh, on that note, thank you so much for joining in today and wishing you a great year-ender and a happy 2026 as well. 2 days left for that. To get in this conversation.